Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the calendar, although it's quite bare, right? We've got GFK consumer confidence numbers, S&P Schiller numbers. I'm not sure if those US numbers are coming out, to be honest, but the German ones will, and Euro is edging up, so they could come into play. But you know what? You're sitting back. There's not much going on. You get about your day. What we've seen is dollar yen sort of drop to the downside. It's down about 100 points, right? And that is putting a bit of a soft touch on the dollar in general. And it's enough to sort of get the euro, sterling, Aussie, Kiwi slowly moving to the top side, right? Now, if you have a look at the yen, they're not going too far because if you look at the yen crosses, right, they're all sort of getting a little bit belted. Aussie's the odd one out at the moment. Kiwi's holding in there as well, but we've seen CAD yen, okay, lower, Swiss yen. You've got sterling yen and euro yen all falling, right? Probably going to stop those pairs against the dollar traveling too far. Now, I'm having a look across the various components, and you know what? The dollar yields are slightly lower, but the equity markets are slightly lower too. And it's sort of creating a little bit of confusion. Euro, sterling, Aussie, Kiwi up, the dollar down. Now, I'm having a look around, trying to work out what's going on here with the dollar. Okay, and there's a bit of news, you know, a bit of mixed news on the yen. Okay, the new economy minister says weak yen has benefits to growth. Of course it does. If you've got a weaker currency, you sell more stuff. It's good for growth. But the finance minister, Katayama, okay, she's come out and said the fair value for dollar yen is 120, 130. You know what? That is a form of intervention. Now, I don't know if she was meaning to be intervening. It's probably before she was appointed. But Trump and US Treasury Bissett are over there, right? Now, this came out a bunch of hours ago and calls for sound monetary policy. To me, he's telling them you've got to raise rates, right? The BOJ interest rate meeting is on Thursday. No one expected anything to happen until Thursday. All of a sudden, Scott Bessent turns up, says we need sound monetary policy in Japan, right? What he's talking about is, I think this is a huge pressure play on the Prime Minister and the Finance Minister, Katayama. And they're like, you know, you got to keep everything under control, make sure anchoring inflation expectations and preventing excess exchange rate volatility. Like, what's he talking about? Because so, like, you know, with weaker yen, this is the thing, right? And this has always been the problem with the US and Japan. The weaker yen, stronger dollar, okay, everyone starts buying Japanese products, cars, everything, and it screws up the US. Even though they've got this stimulus package going, this is a big push from the US to say, get your house in order, get some monetary policy. Your exchange rate, okay, is too high. I've seen this before, right? Over the last, 30 years. This is like back into the 90s when the US used to go over and sort of strangle or choke the Japanese economy, make them put up interest rates. And that's exactly what this is to me. And I think that's why we've seen a bit of a clean out here in dollar yen, right? A day and a half before the Bank of Japan meeting, right? They're rolling out this stimulus package. The US, to me, are going to force them to actually raise rates, hike rates. So when we come back and have a look at the market, right, US yields are a little bit lower overall, right? These things are just dribbling lower. So that gives us a lower dollar, okay? And that is, that is in play. Now we're starting to see dollar yen kick into gear. I wouldn't be surprised to see a little bit of a shift in the interest rate tracker. And what I'm talking about is the Bank of Japan. It's a bit of a line ball decision whether they hold rates steady or not. Okay, it's I still don't get it, right? So even over the course of today, it's gone up a little bit more that they will remain on hold. To me, what Bissett is saying, raise rates, right? Raise rates. You buy yen, you sell dollars. That's the move we're seeing. Anyway, I'm a little bit overexcited about it because we haven't seen sort of something like this for a while. It's good to see the beast in play, right? Now, like most of us, we're waiting for some of the major pairs to sort of kick into gear. What we are seeing is, yeah, the beast is kicking into gear and it's taking all the crosses for a bit of a ride. Now, do we see a bit of a bounce? You'd think so, right? But still, on a technical basis, the yen crosses are a sell on rally at this point, right? It's sort of weird. We're talking this ahead of the BOJ, but anyway, this is what I'm just sort of reporting what I'm seeing and actually going, you know what? Uh, for all intensive purposes, the yen crosses are now falling. Dollar yen is falling. Okay, it's not like a lead balloon just at the moment, but if Katayama is correct and fair value for dollar yen is 120, 130, then it's got a long way to go. All right, let's see how it plays out over the next day or two. The BOJ interest rate decision on Thursday has just taken another big step. It's going to be huge. And let's just see how it plays out from here. So right now at the moment, we do have GFK consumer confidence numbers. Okay, if those numbers are stronger, we're going to see the euro pop to the top side. It's looking for an excuse to go higher. That is an actual fact, right? And if we just have a look at the calendar, you'll see the range here for the data is minus 23.5 to minus 21. Minus 22 is the forecast. Stronger numbers by euro. All right, guys, have a good one. All the best. Cheerio.